Good afternoon everybody, welcome back to Cilinix Crypto and welcome to a new trading education video in which we will focus on fakeouts. Alright, first of all, how to actually spot them, how to avoid them, but then lastly we'll also talk about some potentials and how you can actually trade them and make money from them. Alright, so a perfect example of a fakeout is something like this. Alright, we see a chart, you see a relatively clear balance, I'd say, at least some sort of a consolidation right here. So then you want to buy the breakout or sell the breakdown, but a bullish breakout or a bearish breakout, it's the same for me. And what you can see right here, if we fast forward a little bit, is that we have actually broken out. All right, so here you can see a strong resistance level here. Since the consolidation, we formed a value area low or value area high right here. I actually moved it, so my apologies. It should be right here. But we actually created a value area high, that's the blue line right here. We broke above that. You think, all right, well, we actually have some volume coming in. I'm going to buy this. And what does it end in? Or at least what can it end in? Here we initially have some sort of a retest, but then it turns into a massive fake out. All right, and this is one of the main things we want to avoid, but it's also one of the main things that you can actually make quite a lot of money on. All right, so that's what we'll talk about. This specific example was Ethereum, as you can see right here. I've now forwarded the value area a little bit, but that's what we'll talk about, fakeouts. All right. So what I wanted to start off with is how to actually spot fakeouts. All right. So when you actually see a breakout, so you've established a strong key level. Let's for this video, let's take the example of a bullish breakout, but it can be both directions. You've established a strong resistance zone, like we can see right here, especially also if you take into consideration, if we do not extend this value area right here, if you take into consideration that at that point of time, the value area high was around that level. All right, so you could say, well, why did you draw it right here? The key level is right there. But no, the value area high, as you can see, was at 1660, and we did break above that. But it turned into a fake out. So how could we have prevented that? All right, if you want to trade breakouts, how could you have known that this would be a fake out? And there's a million ways in which fake outs occur. But in this video, I wanted to focus on a limited amount of reasons, but the reasons you see most often, right? So the two reasons I wanted to talk about, or at least the two ways you can actually find these fake outs, is low volume and manipulation. All right, manipulation. Look, I always try to use this word a little bit. I don't want to use this word too loosely, so I wanted to say slash liquidity. But these are the two reasons in which you can actually spot a fake out, and that's what I wanted to talk about. And how to spot it and how to avoid it is basically the same thing. And obviously the foundation of this is being able to draw correct key levels. All right. And for that, I would say go to the higher time frames, use volume profile ranges, use Fibonacci levels. All right. And use one way in which you draw those Fibonacci levels, and just use high time frames to identify those key levels. Right. So for example, it's very clear that this level right here between 1760 or at least, well, let's say at least 1760 is a major key level that we can have a fake out above. But for now, let's zoom back in. So what you can see, if we take a look at this fake out right here, for example, if we go back to the 1 hour time frame, is that we actually did have some volume come in during that breakout. But then you can, if you compare that volume, and you can see that slightly down here, right? So here you can see the volume that we got in during the breakout. If you compare that to the volume we had just before that, it's relatively low. All right, so even though we had a volume increase during the breakout, which almost always happens, the volume was relatively low, which is one of the main reasons why a fake out occurs. All right, we basically have a range. All right, so buyers and sellers agree that this is a fair price, a fair range. So if you actually want to break out, and if you want to have a lasting breakout instead of a fake out, you need a lot of volume, right? Because you need volume to get some sort of a shift, and volume usually also comes about when something happens, something changes that will make the fair value or the consolidation range different, all right? So, or at least that the price is going to search for a new value range. So volume is by far your best friend when identifying these fakeouts. And if a breakout occurs with low volume, it's quite likely that it is a fakeout. All right. And then the other reason, and I'll take a look at this with, look, I wanted to give you an example of a potential fakeout. And then we'll talk a little bit more about that. But if you, for example, and I'm going to draw a little bit right here. So if, for example, you have a range right here, right? And then you have a POC, point of control in the middle, and the price moves up and down within that range, right? So that's normal. And then the price bounces from the POC and it tries to break out. What you need to know as well, and for this you need to zoom out, is if there's any liquidity left to the upside, right? So for example, if you had a different range right here, from a month ago, and you still have a naked POC right there, that's very often a liquidity zone, then that level could just be, this move could just be a momentum push by buyers to grab that liquidity before faking out, right? So in general, the rule is that if there's a high liquidity zone above the main resistance level you want to look for a breakout, then it's also more likely to be a fake out, right? So that we just grab the liquidity and then drop back down below into the range. And then last of all, but this is not always true, but last of all, what I always tend to say, at least with Bitcoin and Ethereum, look, a breakout usually occurs if there's some news, right? So if the stock market rallies, if we have some specific news for Ethereum or Bitcoin. So again, if we break out and there's no news that indicates that we should break out, that again makes it more likely that it's actually a fake out instead of a breakout. Now, I wanted to quickly take a look at an example to show you how to trade these, because you can very much trade these, right? I mean, for example, with this Ethereum trade, the volume was low. There was no reason why Ethereum would break out. So you can just short the reclaim back within the range, right? So you said, for example, all right, the main level is right here. I don't trust this breakout, so I will short once we actually break back down into the range at that level, at that key level. And as you can see, we touched it right here a couple of days later, but beautiful trade, and we drop down all the way to the bottom of the range. Something similar is going on with Bitcoin right now, all right? Bitcoin right now, so this is a perfect example. Bitcoin right now is ranging right here mostly between 85,300 and 83,000 or 84,000. That's the main value area. But then the main level we're looking at for a potential breakout is this level at 85,300. But what we know is that there's a naked point of control and also a high liquidity zone at this level at 85,700. So then if we break out, look, the first thing we'll look at is the volume. But if the volume is not high and we know that there's liquidity to the upside, it's very likely that this is a fake out. And you can take a short once we actually reclaim back under that key level we're looking at for a breakout. Take a short and ride it all the way down to the bottom of the range. So those are my thoughts on fake outs, all right? How to actually spot them, how to spot and identify them, and how to avoid them in that way, because you're able to spot them, and then also a bit on how to trade them, because trading fake outs is one of the best trading methods and trading strategies there is. Now, if you still have any questions about fake outs, look, it's a very big concept and big thing within trading. So it's like in one video of about 8-9 minutes, I won't be able to explain everything to you. If you still have any questions, let me know down in the comments, or join the free Telegram and Discord groups. Ask me in there, in which I always try to respond very, very quickly. But those are my thoughts. That's what I think you need to know about fake outs for now. If you do have any questions, let me know. Like I said, for now, have a great day. Take care and bye.